Area up here.
It was on mute. I'm gonna start in 2 minutes. All right, 6 people on. Like I said, I'm gonna start 7 people on. I'm gonna start in 2 minutes. 2 minutes. All right. Again, I want to thank everybody for hopping on that did hop on. Obviously, you know, time is pretty valuable, and I wouldn't be doing this, and, you know, I wouldn't have this group for people who, or I wouldn't just do it just cause, you know, just to hear myself talk. You know, I'm spending my night, you know, doing this for you guys and really showing what it is I've done to, you know, become profitable, because that is people's, you know, top issues, becoming profitable in the Forex market. So what I'm going to do on tonight's call is I am going to break down how I mark up my charts. And if you don't know what I'm talking about when I'm analyzing my charts, I want you to go to my YouTube channel, and I want you to watch the videos that I have on there, Forex for Beginners, quarters theory video I have, and then a couple other videos I have on there as well. All right, so the first thing that I do when looking at a chart, all right, this is just a blank chart, is I make sure my session breaks are on. Okay, these session breaks are for intraday trading, which is trades that you're going to be doing. Kind of you're holding them only on a about day-to-day basis pretty much. So what I do to get those is I simply go, whoever that is, can you please mute your mic? Please and thank you. I don't think that I can. No, I don't think I can. Unmute me. Okay, cool. All right, so first thing I do is I go to, I right click, and this is gonna come up. I go to my time scale, click on that. Oh, disappeared. Go to my time scale, this will pop up, and then you click session breaks. Okay, easy as that. And like I said, once again, this is for intraday trading. If you're a swing trader, you're not going to use session breaks, but I like intraday trading. And also, it's what I use to incorporate my Fibonacci tool, which I was going to break down for a couple of you tonight too. So first thing I do is I identify trend. Okay, I see, is there any trend line? Is there any possible kind of thing going on? So first thing I see is I see that, you know, we're in an uptrend. All right, I see that, you know, market, to some, it might look like it's kind of consolidating. To me, I think this is moving up. I think it's moving up nicely. So I'm going to draw my trend line first and foremost. And I'm not going to make it green. We're going to make it black. All right. And then let's see if I can draw another valid one. Cool. So right now, I see price is kind of trapped in a little channel, or it's kind of been respecting this channel. And there was some point in the past where there was some type of resistance. Well, obviously, I like to call this, I call this a double top. What that is that simply when you see one touch, it comes up, touches again, and then drops. All right. So if you had been watching this a couple of days ago, earlier in the week, and you would have paid attention to this, was probably 12 hours apart, I believe, roughly, is what it looks like. And you would have saw this double top, and you still would have been kind of iffy because it broke above this little trend line. However, you saw a break below. It retested that trend line perfectly, and it continued to drop. All right, and then, you know, obviously it's where I drew my point B off my trend line, or to create a valid trend line on the way up. So what I'm looking for right now, just off of these basics of resistance and trend line and such, is I'm looking for a rejection right here. And what I do is I like to draw little zones. Okay? I like to draw little zones. And these are called supply and demand zones. All right, simply what that is price. There are areas of the market where you see wicks, and that'll show where price has been rejected. All right, actually, so you know, this is a perfect example. So I'm going to draw this, and I'm going to draw little zone right where this wick is. You guys see that? You see how I drew it? I don't draw it in the bodies. I draw it on the wicks. Okay, I draw it on the long wicks. Look at that. So I drew it out. Look at what happened. Price pushed down. It didn't close. It didn't close below. It closed right here. And then we started going up. And we were already on a uptrend. So if you didn't get onto any of this, you're getting discouraged, whatever, you could have waited. Waited for a good entry. You could have entered right here, caught that move up, or you could have waited until it came back down, retested, and you could have caught that entry up too. So we want to look, because I see, a lot of traders will do like things, what happened in the past, like this is why this happened, whatever. But I like to create analysis for what I think is going to happen in the future. So I'm going to extend these out all the way. And normally people ask me, like, how long do you hold your chart analysis for? Like, how long do you keep your charts up for? And normally I redo them every week. So I'm starting this fresh to show you guys what I do in marking up charts. So right now I have an idea of what the market is doing. We're seeing a nice push up right now. So yes, we ideally want to see continued upside. Ideally, I'd like to see a low break above here, above this zone, and above this trend line. If I see a break above there, typically that means that has some bullish momentum. Obviously, we're still in a uptrend, okay? And knowing market structure is very, very important. I'll say that many times. Knowing market structure is very important. Knowing that we are in a uptrend. People shouldn't be looking for any long-term sells. If you're looking for a sell, you're scalping, okay? In this scenario, you're scalping because we don't have any higher time frame, indications of any type of any type of bearish movement. Now, if I would have saw a bearish break below here, okay, fair enough, absolutely. But this is when market structure it becomes very important. Let's see, where is that zone at? All right, perfect. So I'm going to draw this wick out. Beautifully respected. And we continued up. And I like to look at higher time frames to get a good idea of kind of what I'm seeing, what I expect to see. Some people might have thought this was a head and shoulders. However, we are in an uptrend, and once you saw a little retest of H4 structure, this is structure right here. When you see a retest of this area right here, and you see it go up, this is a retest of structure, so the uptrend is still valid. That's why I want to see that break above. But we're going to go back to the 1 hour because the 1 hour is what I use mostly for fibs. And I want to explain kind of how I draw fibs. If you're new to the group, how I draw fibs is I'll go to my Fibonacci retracement tool. If you don't know how to use TradingView, you're in luck because I have a YouTube tutorial on how to use TradingView efficiently. All right, but how I draw my fibs is I'll draw them from low to high or high to low depending on that day. So you see this day trended down and today it's trended up. All right. And for here, trended down, trended up, etc. So I'm going to do, this was a perfect rejection. So I'm going to actually do this to show you guys why I love Fibonacci. All right, so I'm going to draw it. You have to be very accurate because it will make a big difference. You see this is right on that wick and this wick. You saw price come back, retested 38.2, which is also a retest of an H4 structure and a nice little retest of a support area. So this was a buy all day. Everybody should have caught this. If you trade similar to how I trade or just trader in general, this is a very, very high probability trade to take. And that's a nice little 92 pip trade-ish. Which on a 0.10 lot, that's $92 on the standard. It's almost $1,000 in just about 5-6 hours or so. During London. I know that this happened around 4 a.m., I believe, 3-4 a.m. I had a nice little mobile markup on this as well. But this was definitely a nice little area, nice little trade to hop onto. But I'm going to go to where price is currently at. We saw, like I said, it trended up today. So I'm going to draw it from this low point, and I'm going to draw it to this high point. Okay? So people always try to go against the trend and like, oh, I see it's a negative 27, so I'm, going to sell. No, don't do that. What we look for is, since we're in a bullish trend right now, we're looking for a break of this area up here, because this is a negative 61.8 and it's a nice little resistance and a zone. So tonight, what I would like to happen is I would like to see price come up right around this area. Okay, might not be this exact, but right around this area, I'm going to see price come up, and I want to see a nice little rejection, but I don't want to see a rejection all the way down. I'm not getting into a trade right there. I'm waiting because we're still in, that uptrend. And this is a nice little area of little resistance, little support right there. So what I'm looking for is I want to see a rejection off of here, and I want to see price come back down to this 38.2 or to this area right here. See nice long wick, okay, like we saw right here, nice little wick, and a continuation up. So ideally, I want to see what I saw right here. So I want to see push up, what we're seeing, all right, push up, pull back, so we call pullbacks, and then I want to see a continuation up. So here I can draw that out for you guys too, just so you can kind of visually, see what I'm saying. All right, so like I said, push up, rejection, low wick action right there. Expect this to happen around London, which would make sense because it's a decent amount of candles. And then a continuation up. Now tomorrow's Thursday. Thursday nights are normally really good nights to trade. Really good nights to trade for the reason being, throughout the week there will be, a pretty obvious trend that the week is doing. So then normally there's some type of reversal to end the week. And it's always nice to catch that little reversal because it's a decent amount of pips. If we see a big push up all the way, like let's say up here, let's say it breaks up here, and we see a nice push up, that reversal could happen all the way, could push all the way down here. So when we see that reversal, see it happen all the way down here, and then a nice little push up to end the week. But that's saying a lot. That's predicting a lot. So we'll see what happens. I'll leave this markup up for you guys, so that next week we can come back to it sometime and see kind of how the week played out. But this is what I'm looking for tonight for Euro USD. And next I will do USD JPY. Trading view. All right. And then let's do USD JPY. Always focus on 1 to 2 pairs. I'll see people post screenshots of 7, 8 pairs that they're trading, and I'm like, that's stressful. Like, to me, that's stressful. I don't know how you can consistently keep track of 7, 8 different prices. Like, you're just making it a lot more. You're making it harder than it needs to be. And people are like, well, I don't want to miss a trade. I don't want to miss a move, whatever. But then that's when you just I feel like you get greedy. Like, you want to master 1 to 2 pairs, I say. Obviously, everyone trades differently, but that's just, everybody has their different style. So USD JPY is really ugly. It's been in this kind of box, but wow, I don't know. Oh, wow, they changed their trading view. Must have did an update because this all looks weird. But anyway, you saw that this is obviously in a little box. All right. Right. Started consolidating, and it's been a little box. So personally, I wouldn't trade this pair at all. I wouldn't trade it right now. There's just too much consolidation. I think if you really want to, I mean, I'll analyze it for you guys. But personally, I'm not trading it. To me, I think we could see maybe a push up as well, just because we saw a little breakout of it. We saw a little breakout of, the box. And also, we're in downtrend. We saw a nice consolidation. Like I said, we see that push up. So we might see a start of an uptrend. Let's see. I'm going to go to 4 hour and see. 4 hour doesn't really, let's see, maybe a little bounce off 4 hour trend line potentially. Okay. So that's very valid. It's a nice little 4 hour trend line. So we could see a nice little bounce off that 4 hour trend line and, see that push up. But once again, what I'm going to do is I'm going to identify my support and resistance. All right, so that's a nice little area of support that it's at right now. And this is going to be okay. I see a reversal on the 4 hour for USD JPY. Is that what you're saying for USD JPY? What type of reversal do you see? Where do you see a reversal at? Because it's in a weird spot. This is probably what's getting a lot of people is you see a big red candle. However, we've been pushing up for several days. All right, and we have yet to break this 4 hour trend line. So before I'm convinced of any type of drop, I want to see a break below here. Because gold actually did something like this not too long ago. Gold was going down, had a big push down off of last month's NFP, pushed down, had a little push up, and it broke a trend line and dropped a lot. So I'm waiting. Like I said, I would not trade this pair right now. We're kind of just waiting for any opportunities that we see. I'm going to draw another one of my zones. All right. Yeah, I mean, everybody sees the market differently too, so it's really what you think. Because I don't want to tell you guys something and then you see it differently. Like go with what you feel, and if it's not right, then figure out why and learn from it. Or if you are right, then awesome. But this is what I see. So right now I see a little trend line, seeing some nice zones. I'm gonna pull out my Fibonacci. Okay. Here, I'm gonna pull up so you can see more of it. So this is right here is a nice little indication of a possible push back down. You see right here we have a 127, have a nice little area of resistance, and have this nice zone that I drew out as well. So what I would expect to see is either we're going to see a push up, a rejection, or we're going to see it come back down, or we're going to see it break below, kind of retest this negative 27 and drop, or retest this zone in this trend line and drop. So here, I'm going to zoom back out. Always want to see like the bigger picture. Okay. So this could also be trapping buyers a little bit, getting them excited, and it could, like I said, easily break below. So that's why, that's why trading is patient. People aren't patient, and that's where they get screwed. But I'm gonna go into quarter points a little bit. I'm going to erase everything that I have, erase session breaks, and I'm going to erase my drawing tools. Okay, now I'm going to mark up some quarter points. Basically, quarter points, to summarize, I have a video that I did on it, but quarter points are areas in the market. There's a book actually called The Quarters Theory. and it's amazing. I love. What is that? So if you haven't read it at all, or if you don't know what it is, basically it's just really strong areas of support and resistance that the market respects, and that you will see a higher time frame reversals on. So the daily, you see a nice little reversal below a quarter point, and it broke above, and it looked like it wanted to retest it, but there are certain times where it may come close. That's why if I'm using quarters theory, or if I'm marking it up, I'll draw a little zone out on the daily. I'll draw it out, and then you see perfectly retested that zone perfectly, and then it's been continuing up. Do you think gaps? Ignore gaps. Anything you know about gaps, ignore it. You don't know anything about gaps. Don't worry about gaps, because there are gaps from October or November or July that haven't been filled. So ignore that. That gap is irrelevant, because people think like gaps are areas in the market where like it has to go back. It doesn't have to. There are gaps that have never been filled, probably, that I can think of. There are gaps that probably just never been filled. So don't think of gaps, or don't think that, don't look at gaps and say that influences your thought on what the market is doing. So back to the quarters theory. Quarters theory is every 1,000 pips. All right, so on USD/JPY, 110 is one, 120 is one, 100 is one, and so on and so forth. So let's see if you can see. So actually, what's funny is, all right, so 100 is a major quarter point. All right, look what happened. Rejection. This is on a daily time frame too. So if you would have got on any of these entries right here, it never broke it, right? Because this is a major quarter point. So if you'd have got in on that, and you would have waited for a daily close, or right here, if you would have waited for a nice retest, this was probably a 61.8 or a 38.2, and you would have got in on that buy, that's a lot of pips. That's a lot of pips that you would be up, and that's almost all green. You have very little pullbacks on that. So that's why I think we still might be heading in that general uptrend, because we see a nice little rejection off of a 110 quarter point. See a nice little push up, maybe. Who knows? I know this is talking long term, but we could be seeing a push up to 120 potentially, is what I might be looking for. But there's also minor quarter points, because those are majors, and so minors are every 250 pips, because majors are every 1,000. So minors are every 250 pips. So if 100 is 102.50 is a minor. So we're going to do that one. Oh, no, I don't like this. Nice. All right, so 102.50. Okay. 250 is one, which there's that perfect retest, and that's off a minor quarter point. And then the next one would be 105, and every pair is different. So like gold is a little annoying because prices are weird. With this one, it's pretty nice. So we have 100, we have 102.50, 250 pip increment. We have 105, 250 pip increment. And we're going to have 107.50. Okay? And once again, those are minor quarter points. So look at that. We see perfect a failure to break that minor quarter point, and we saw a nice push back. So if you just saw that and you want to take that aggressive trade, nice little 700 pip catch, 700 pip catch in about 2.5 weeks. This is kind of, I think it's swing trading personally. If you're in one trade for like a week and a half, 2 weeks, 700 pips. I don't think I've ever seen anyone catch a 700 pip move that has posted about it. So if you catch any type of 500 pip move or more, then you post that everywhere, because that's incredible. It's an incredible trade. Because not a lot of people can hold on to that. You know what I mean? It's a nice trade. So then let's see, after the 110 is going to be 112.50. Okay. And then after 112.50, we're going to see 115. Nice little act as support. Low resistance, 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 resistance. And it almost touched it. And then 117.50. So as you guys can see, like just from quarter points, you can see how powerful, you know, this is. And this is on the daily time frame, remember. So if you're looking to take a trade, if you see prices close to a quarter point, zoom out to the daily and see if you see any type of reversals. Like, see if the daily closes at as a doji, or like a engulfing candle, or maybe like a inverted inverted hammer, whatever you want to call them, tweezer tops, double tops, whatever. But this is a quarters theory. I recently started using it a little while ago, but it's on the daily. So here, I'm gonna go back down to a smaller time frame, and that is awful. So right now, price is literally in the middle of a major quarter point and a minor quarter point. So I'm once again absolutely not trading this pair. I'm absolutely not trading this pair right now because it's ugly, very ugly. I'm either looking for a push up, and if I don't, if I get a retest, nice. But I want to see if I see strong bullish candle, a 4-hour candle, hour candle, whatever it may be. If I see it break, then honestly, then I think it's just going up. But I definitely need to see some type of really, really bullish move. That's quarters theory, kind of broken down in a nutshell. You can see how powerful it is. And also on the flip side, we could see a rejection off, and we could see a push back down to this 110, to this major quarter point. But this is how I trade. Simply just here, I will type it out actually. 1, identify trend. Can't type. Identify trend. 2, place support, resistance, support, resistance. 3, cool. 3, identify potential zones. Identify potential zones. Which are those zones? Those blue areas that I drew out. 4, if you do trade with fibs, place fibs accordingly, meaning know how to draw them accordingly. Because if you don't know how to draw them and you just draw them completely wrong, then it's going to make a lot of difference in your trading. Identify trend, place support and resistance, identify potential zones, place fibs accordingly, zoom out to daily. TF is going to be time frame. So TF, time frame, and place place major QPs, quarter points slash minor I. Oops. Slash minor QPs. Okay. Yes, someone had a question. How important is pattern recognition? It's everything. It's everything in trading. Being able to recognize what's going on is incredible, is very, very important. Because you see how price came up, rejected, came down, pushed up again, rejected? You see what happened here? So if we see a strong push up, that means we're very bullish, okay? We're very bullish because we see this on a higher, this was a strong push down on the daily. However, this was a daily candle, okay? So for an entire day, this dropped. But it didn't keep pushing. It didn't keep pushing because there were previous areas in the market that was respected. And you see right here was respected. So even if you would have waited, and let's say you were aggressive and you wanted to get into a buy immediately, it's 138 pips, 137.5 pips. Just from you seeing on the daily time from that rejection, and you see the push up. That's nice. 138 pips is it's a good trade. Like that's an absolutely solid trade. So with that being said, does anybody have any last questions? Because we only have 5 minutes left and 4% battery. So does anyone have any other questions? This was recorded too, by the way. So if you were a little confused about anything, go back, rewatch any part of it. And I also have yeah, absolutely. You're welcome. But once again, I do these, because I want to help you guys. I don't just do them just because I want to hear myself talk. I do them because, I want to help you guys. I want everybody to become profitable. Look, already, since I explained it, we're seeing that push up that I said, seeing that push up. So just watch the market. Take nights to sit back and just watch what's going on. But with all that being said, I'm going to let you guys go. I'm going to send this in the group right now, in the Telegram group, so that way everybody can watch this. Oops. When will the video be posted? Yeah, actually, the video will be posted in 10 minutes. All right, it takes about, what I have to do is after I end the call, I have to wait for it to convert, and then I have to take the video from my folder in here that I store them all under, and I have to upload it to YouTube. And then from YouTube, I have to send it to my Facebook. And then from my Facebook, I get on my phone, and from my phone, I send it to the Zoom app or the Telegram app. So it's a lot of steps. So but all in all, it takes like 10, 15 minutes. So just bear with me, and then I will send it to you guys. Cool? So I hope everybody has a great night. Absolutely. Absolutely. It's what I love hearing. That makes me really happy. So all of you have a great night, and then I'll see you guys on the next call. All right. See ya.